Hello and welcome to another update video about VeChain. VeChain is one of the coins where we can't really have a lot of trust in unless we get back above the 88.7% fib level, and that is above 3.3 cents. Again, you can see how relevant this is. We broke below that key level, which is actually here where my mouse is, the 3.3 cent level. We broke below that already on the 12th of May. We then came down further. We retested it from below and were not able to push higher. That is not a good signal. That's actually a very bearish signal. So we came down, then dropped, moved sideways, tried to get back above it, failed again. Not a good signal. Yeah, so at the moment, this is a coin I personally would avoid for now, unless we see here some bullish signals, because it's all about trust, you know. And at the moment, we haven't really got the trust here. We continue to move sideways here, and the problem is, you know, there is, of course, a bullish count. We can make this work bullish. The thing is, how reliable is it? So in a bullish count, we have here a 1, a 2, a 3 in a diagonal pattern, yeah, a 4, very deep 4, getting tough already, yeah, not reliable anymore. And then the next wave up should be a wave 5. I mean, there was a point down here where in both the bullish and bearish scenarios, I expected rising prices. We talked about that in the previous videos. And to be fair, we saw rising prices. You sometimes get this. Yeah, after such a strong drop, the reward, yeah, if you go long, the possible risk to reward is in a really, really good relationship with each other for you as a trader, yeah? Because if in the bullish count, you would expect a move up, and in the bearish one as well, in a corrective wave 2, that if you then go long, this at least gives you some more comfort and you can enter the market at lower risk. But the question is, you know, is VeChain the best coin in such scenario to enter at the moment, as long as we are below that 88.7% fib level, which leads to a bearish overhang above the chart, you know, about the chart, it might not be the best option, you know. So here in the bearish count at the moment, we would expect anyway to push a little bit higher, ideally into the region between 2.7 and 3 cents here. Ideally, it doesn't actually need to get there, but in a wave 2, I would expect it to get there. Otherwise, it is a very weak chart anyway. You know, maybe we don't get there. It doesn't need to. There is no rule that says that the wave 2 needs to get to that level. So if we draw the Fibonacci levels, you can see that we have not even reached the 38.2% Fibonacci retracement level at 2.7 cents. We would ideally push. Yeah, no, this target starts at. No, I need to move that. Sorry, I need to move the target. We move it down a bit because we have seen here this additional dip. I think this target area, yeah, was based on the previous lows. So let us move down the target area. Forgot to add to adjust that. So you can see we really we nearly reached it. The target is based on the area between the 38.2% fib level and the 61.8. That is where I would most likely expect such a wave 2 to get into. We nearly got there already. Let's see if we will reach it eventually. Could push a bit higher, but yeah, it's not very convincing what it's doing at the moment, but it can push higher. That would be the primary expectation, to get into this area. And then looking at what the chart does, yeah, if we see a strong reaction here at one of these fib levels, there's a good indication we come down lower in a wave 3. The wave 2 can extend higher, but if it gets above 3.15 cents, above the 78.6% fib level, it will be unreliable that it's a wave 2, and we could look at potentially more of a breakout pattern to the upside here, which would be the bullish count in a wave 5 then. But even if it does that, it's all about strategy. Yeah, I mean, again, down here was an opportunity to go long because both were pointing to the upside. If you miss this, you know, and we start to break up here and go above the 78.6% fib level, then again, there's an opportunity that this is actually, or the possibility that this is the wave 5. But what happens after the wave 5? It would be the completion of the larger wave 1, yeah, and then we would come down in a large wave 2 anyway. So that would then be the opportunity to buy in again, yeah. But yeah, so at the moment, primarily here, focus to the downside. Unless we get above 3.15 cents, then we could consider something more bullish. But really, I want the evidence that VeChain is able to push above 3.3 cents. I mean, don't get me wrong, this could become a inverse head and shoulders pattern. Absolutely. Yeah, inverse head and shoulders in some way with the neckline. But like, again, the neckline, what would be the neckline? The neckline would be the 88.7% fib level. So there's no way around it. We need to break above this key level. Okay, and that's my update about VeChain. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And also check out the channel membership. Thanks a lot for watching. Bye-bye.